I think my priorities are in fact the SEBI's priorities under the parliamentary mandate. So it's not really,
which at this point in time is
in
what?
one sense personal to me as a chairman. But we are a creature of the constitution. We are also a creature of parliamentary statute. And we have got three mandates. One is that investor protection. The second is the development of market. And the third is a regulation of market. Now, these three things are important and they have to be balanced. Because to some extent, if you have a good development of the markets we require, you need to have a regulation, and that regulation also need to see that we protect the investors. However, if we have a regulation which is excessive, it may impede the development of the market.
Right.
So so what we have really to say, the balance, how do we strike a balance between a regulation which is just a bit too much or a regulation which is just too little. So that is the word, I use the word optimum regulation. And if we are able to do that, we basically try and balance the two imperatives. And that will mean that more engagement, more co-creation, and a pace of change which will be conducive to development of the market in an orderly manner without really putting too much of a stress on the system, because we do understand that every regulation also puts a burden, compliance burden on this. So while we might have contextually a need for certain regulations in a certain context, we might also in the same breath also eliminate some of the other regulations and not add up to them.
Right.
So there could be a situation where you can sort of keep on sort of contextualizing your regulation, but at the same time keep on eliminating which are really no longer necessary and not really add on the regulations. So the cost of compliance and the cost of and the ease of doing business are imperatives also equally important, while no longer ignoring the risks which might be there. So we have to mitigate the risk, but in the least cost way.
Sure. So another very heartening thing about stock markets in India, at least in this cycle, is how the domestic investors have really taken to Indian equities. It coming directly, it is also coming through the SIP route, which is very, very healthy. But the flip side of this, as many fund managers also have been pointing out for quite some time now, is that it tends to create asset bubbles. It's something SEBI also pointed out last year sometime. What is your view? Is there a way in which SEBI can sort of do something to regulate asset prices so we don't sort of bubble up, boil up, and then there is a big meltdown?
I really don't think that is a SEBI's role. I mean, we will be, if we interfere too much in the market making process, it may not be healthier for our capital markets. What we really need to do is to enable a process of capital formation. While India has a very big opportunities at this point in terms of the demographic transition we have, the quality of entrepreneurship that we have, and the banks and other institutions willing to support and lend a helping hand. And in capital market, the investors which have grown from 45 million in 2020 to 130 million today. And we have FPIs who are, sort of quite positive about India. So we have all the wherewithals where, a lot of companies can come in, a lot of capital formation can do it. Supply chains, India, sort of many supply chains are shifting to India. There's no reason why so many unlisted companies can get into the listed space and enable, new papers. And that's important. In fact, last year, we have about 4.5 lakh crores of issuance in all kinds, IPOs, FPOs, QIPs.
Right.
So, there were about 6 lakh crore, which was, ingress to the mutual fund industry. So therefore, this is important, that while the investors are coming in, the issuers are also coming in, and that is what, you have lots of papers to do. and then lots of investors also to support that paper.
Sure.
And of course, everything depends upon, you have to also keep a healthy balance sheet, and the corporate earnings must continue to grow. The opportunities that 6% plus growth rate, which India is right now clocking, and infrastructure funding, which continues to be in fairly high level at the government, provide the wherewithal for this kind of a nice capital formation to handle, to take place. So therefore, I think both the sides we have got the merits.
Sure.
And so therefore, the possibility of asset bubbles happening then will be, will get diminished.
Right.
Because if you have more papers which are there. Now REITs and InvITs have also come in, where several, new something. We have also brought in SM REITs. I think we have to enable more and more products. Now specialized investment funds have been brought in.
Right.
But eventually, it has to get into the real market economy. That's important.
Right.
And in order to have a real market economy, we do have the, all the enablers. So I would say that this is one of the best times then we can actually have a very growing capital market.